Right, so final video. I guess you can, from what we've been doing, you can start to think about this issue of the best way to relieve losses, and the things to think about when you make these choices. So, I mean, if you don't know, I mean, cash flow is central to a lot of this thinking. Most businesses will tell you they're right at highest on their list is how to obtain cash flow as soon as possible. So if you've been paying taxes in the past and now you've made a loss, what you want to try and do is take the opportunity to be able to carry that loss backwards to retrieve some of that tax you have already paid. So typically, carry back is usually better than carry forward, as this will generate cash repayments. I mean, this doesn't mean, if you like, that this doesn't mean that there are no consequences. The consequences are that you will lose those QCDs, if you like, that came in as some kind of loss relief, so to speak, that you don't gain those anymore. But of course, you can only carry back losses. I've highlighted this after making a current period claim, which was different to individuals, right? Individuals, you can skip your year, go back, and then go forwards. You can't do that with companies. The advantages of companies, though, of going forwards is that, or going forwards, is that you can protect those QCDs. So that's the advantage there. And then there's a second issue here that because typically corporation tax rates are falling and you would have paid more tax in the past, so therefore it does make sense to go back to try and save some more tax and get some money. Again, like I've already highlighted, the consequence, of course, unfortunately, that you will be the issues of wasting QCDs arise for carry back, but are not really an issue for going forwards. Now, property business losses, key points here. I'll just take you here and I'll go straight to the notes here. So I highlighted this earlier when we did when we did chapter 13 and we were talking about property. Imagine you have a loss. There's no problem. Again, like I say, you've got a loss. You can use that loss, if you like, or you will use that loss in your year. So you can see it's an automatic relief. So set against total profits before QCD. So you can use that loss in your year against your income, your other income. So trading income, chargeable gains, if you like, interest income. So you'll use that loss and you have to use all of it. So you can see what's going on here. When you use all of it, now again, it means straight away that you cannot preserve the loss in favor of QCDs. So this is the issue with why we separate these out. So QCDs unfortunately have to wait to see if they can be used, if there's any profit left basically to use against the QCDs. That's the first thing. And you can carry them forward. And again, you can carry them forward as losses to preserve QCDs. So it does follow the same pattern. Now, a couple of things here. The key issue here is this. You cannot carry back property losses. So therefore, the argument then becomes, listen to what I'm saying carefully. It's not tricky. It's just that, well, if I can't carry back property losses, if you only had trading income here, well, then this wouldn't be an issue. But imagine you had trading losses and you had trading losses and you also have property losses. Well, which is what this is saying. What you want to be careful, because you can carry back trading losses, what they're telling you is, well, do your profit loss first. Utilize your profit losses first. After using that, then use your trading losses, so that if you have any trading losses left, because you must current year carry back, then you can carry back those trading losses. So the argument is always use your property losses first, because you can carry back trading losses, but you can't carry back property losses. Right? So let's just see. This is a nice little example to just kind of highlight this little point here. Yes. So what are we saying here? So what are we say? We're saying here that you have in this year, you have, you can read the question quickly. We did this in class. So you can see here, they're telling us that you have other income of interest of 87,000. Then you have chargeable gains of 12,000. So we're saying that in total, basically, you have what did we have? 99,000 worth of income. So they're saying, well, so that you preserve this trading loss, what you can do is use your property losses first. I'll just change my pen color. Use your property losses first of 62,000. So 99 minus 62, 99 minus 37. So now you have £37,000 worth of profits. So now just cautiously watching this, I mentioned this in class. It says that you have, remember that you don't have to use only if you're carrying back. Oops, sorry. You don't have to use your trading losses in your year unless you're carrying back, right? Because you see, this question is rather interesting because you have trading losses to bring forwards. So this is the first step of planning that you want to think about. The question here is, what I could do is bring forward that loss of 40,000, and I can even manage it so that I don't use all of it because I have qualifying charitable donations of 2,400. So bring forward some of that loss, just enough to preserve 2,400. So here you will bring forward so that you have 2,400. So here we have what, 600 34. Yes, that's right, 34,600. Yes, so you bring forward that, and you can carry forward the rest of this loss, which is the 40,000 minus 34,600. You can keep carrying this forward. So the key point here is that I'll highlight the key points here in a second. 400 you have here, 9, 5,400. So you can keep carrying 5,400 of that trading loss brought forward. And you also still have the 145,000 that you can carry forwards, of course, to use against total profits of the coming years, whilst preserving the qualifying charitable donations. And yes, and that's kind of the your option there. So you can see that the order we tended to do this is first of all, use any property losses, if you have any, against your existing income, and then bring forward your trading profits, any trading losses, use that, preserve qualifying charitable donations to the extent that you can, and then see what the situation is. Are you going to maybe then pay tax on whatever's left and then carry forward this? Because as soon as you use this, you will lose your qualifying charitable donations. So not on this course where we start doing the actual numerical advantages and disadvantages of it, and as in calculating out. But it's about just thinking about it and being able to write about it. Capital losses are the rules haven't changed. That is very much a case where when we have losses, as you see, we cannot use those losses, unfortunately, in our year. No, the best you can do with them is to carry them forwards. You can't carry back either. So you have this chargeable loss in this scenario here. All you can do, if you like, is, of course, if you have other chargeable gains, yes. But then we'll see that one way companies can get around this, well, only if they are in groups. They can transfer losses, they can transfer assets within the group, and therefore utilize gains and losses within the group. But otherwise, what we're saying here is we carry forward these losses. So here I will carry forward this, keep going. So here I now have gains of 4,000. I don't have any chargeable gains here, and that's the picture. So I have nothing here, and then I just carry on. So that's the message here. And in this question, I'm strictly looking just at chargeable gains. I can't carry it back. I'm going forwards only against. I can only carry forward chargeable losses, capital losses against capital gains in the following future years. Cool, great stuff. And that, if you like, is the end of that chapter. And it's really, again, like I say, it's just banging into questions and doing as much as we can, but that's the theory. Cool, great stuff. See you. Chapter 15 is not, according to the workbook, chapter 15 is trading losses for individuals. So I'm not really covering individuals. We'll do individuals in class and you can work on that. I'm just trying to create a set of videos on companies going forwards. But we will, if I do create it, it won't be within this kind of suite of lectures. It'll be under personal um, tax. Cool, great stuff. See you in the next relevant video. I believe that'll be chapter 16, but I'll check.